Hello everyone, in this special valuation revisited video for Credit Suisse HOLT, I would like to talk about how my early valuation of eBay for the HOLT Valuation Challenge compared to the company's actual performance. In my previous video for the HOLT Valuation Challenge, I argued that eBay was undervalued. I estimated that the P/E ratio will be 23. Multiplying this with the whole 2013 HOLT consensus EPS of $2.75 gives us a warranted price of $63.25. My original P/E ratio estimate for 2013 was 23, which proved to be fairly close compared to the actual 2013 P/E ratio of 23.49. In my original analysis, I had predicted that the EPS for the fourth quarter of 2013 to be 84 cents. However, the actual EPS proved to be 81 cents. The annual EPS was $2.71, which was lower than the original consensus of $2.75. Taking all of this actual information into account, multiplying the 2013 P/E ratio of 23.49 by the 2013 EPS of $2.71 gives us a warranted price of $63.66. Compared to this warranted price, the actual closing price at the end of 2013 falls short of my valuation. As of now, HOLT lens seems to suggest that the warranted price is $58.17, which is a 5% upside, which is much lower than previous valuations. We saw in an earlier slide that the estimated P/E ratio for 2014 was 21.64. Combined with the 2014 consensus EPS at $2.98 gives a warranted price that represents a 17% upside. This once again suggests that eBay is currently undervalued and still has much room for growth in 2014. Looking at the relative wealth chart, we can see that eBay's CFROI for 2013 continues to remain above the discount rate, while eBay has decreased its asset growth. Although eBay has barely met the expected revenue in the third quarter of 2013, the company still experienced strong revenue growth in the 2013 year nevertheless. This growth in revenue was primarily driven by eBay's marketplace, enterprise, and PayPal. As mentioned before in my earlier video, PayPal has proved to be a major contribution to eBay's growth. PayPal's revenue alone increased by 90% in 2013, while eBay reported that they had an increase in new mobile users in 2013. PayPal is especially important to eBay because it is needed to help compete against Amazon. Considering that eBay is looking to position itself more as a retail solution rather than a retailer, PayPal is needed to provide eBay's biggest solution of using mobile transactions and payments. In mid-2013, eBay had made a $50 million investment in Snapdeal. This investment was part of eBay's strategy to accelerate growth in emerging markets and drive eBay's global e-commerce leadership. It will allow eBay to compete against Amazon in some of the world's fastest-growing e-commerce markets. Since then, eBay has made an additional fund infusion of $133.77 million in Snapdeal because it strongly believes that Snapdeal will help propel eBay India's revenue growth. eBay's current valuation isn't as optimistic as it was when I made my earlier video, as seen by the lower HOLT score. However, eBay's positioning in terms of economic P/E ratio and price-to-book ratios continues to suggest that the e-company is undervalued. Finally, examining the company's riskiness, we see that eBay is still much less risky compared to its fellow peers. The company now has a lower HOLT leverage percentage as well as higher interest coverage. Overall, while eBay's actual performance did not meet my expectations based on my valuation, I still believe that eBay has a lot more room for growth in the future.